The sexual misconduct allegations against the former Fox News host Bill O'Reilly and the Hollywood producer Harvey Weinstein, and the confidential settlements arising from those accusations have prompted a provision in the final tax bill that aims to stem the use of non-disclosure agreements. Senator Robert Menendez, a Democrat from New Jersey, proposed the amendment last month. It says any settlement, payout, or lawyer's fees related to sexual harassment or sexual abuse could not be deducted as a business expense if such payments were subject to a non-disclosure agreement. I think most Americans would be outraged to know that they are subsidizing sexual predators in the tax code, he said in an emailed statement. But the proposed changes may not deter some companies and businesses from seeking confidentiality. This is a nudge, not a hammer, Daniel Hemel, an assistant professor at the University of Chicago Law School and an expert in tax policy, said in a phone interview on Saturday. Publicly known sexual harassment settlements involving Mr. O'Reilly, who is said to have used non-disclosure agreements, have totaled about $45 million, including a $32 million payout that he paid personally. Mr. Weinstein, whose abuse of women was exposed by the New York Times in October, also has used confidentiality agreements. The Times reported that Mr. Weinstein has said he struck at least 8 to 12 settlements with women claiming mistreatment. Under the tax bill spearheaded by Republicans, a hypothetical company that paid a $10 million sexual abuse settlement would not be able to take a deduction on that amount if the payout had a non-disclosure agreement attached to it. In the absence of a confidentiality agreement, however, the new corporate tax rate would allow the company to save $2.1 million in taxes, making its out-of-pocket cost $7.9 million. For a business that generates billions in revenue, like the parent company of Fox News, a non-disclosure agreement can have far more value than tax savings. The new rules are very well intentioned, but the impact is likely to only be symbolic. Gordon Klein, a lawyer, certified public accountant and faculty member at the University of California, Los Angeles' Anderson School of Management, said in a phone interview on Saturday. The reason for that is companies cherish non-disclosure agreements because they significantly help protect the company's reputation and protect them from follow-on lawsuits or additional lawsuits. The non-specific language of the amendment also complicated matters, Mr. Klein said. The bill refers to settlements or payments related to sexual harassment or sexual abuse, he said, but what if only one portion of the allegations is about sexual harassment? And does it matter if the sexual harassment was merely an allegation, or does there need to be evidence of sexual harassment? Are the lawyer's fees limited to the time spent drafting the settlement, or to all of the fees associated with the settlement? Representative Ken Buck, Republican of Colorado, proposed a similar amendment for the House's tax reform bill, but it did not include a stipulation about confidentiality agreements. In the end, the language in the Senate bill offered by Mr.